Hello and welcome to Trading Hour. I'm Ritu Singh, and joining me live from the CNBC-TV18 Motilal Oswal studio are my colleagues Hormaz Fatakia, and soon we'll be joined by Mangalam Malu as well. Now, as we start the trading hour, markets firmly in the green. The Nifty's, the frontline index, is able to retain that 26,200 mark, now trading up about 117 points as we speak. The Sensex is also up about 360 points. Given some specific news in stocks, stocks like ITC, for instance, dragging the Nifty down, solely contributing about 32 points on the downside. Had it not been for, some of these stock-specific news like we saw in the case of tobacco, perhaps we would have seen an even better start to the new year. Also, before quickly I toss to Hormaz, keep an eye on the rupee as well. It's been hovering around that 89.98 to the dollar mark. And speaking to traders, we've gotten the sense that there's been some kind of a support, coming in from RBI there as well, some dollar sales by public sector banks. So keep an eye on that. It's been very range-bound. It seems to have found some support, just below that $90 mark. But Hormaz joining in, he's walked over to the wall to give us a sense of the stocks that are buzzing in trade.
The bulls are determined to end the week on a high, and the good bit is the fact that a couple of weeks ago the Nifty had made a high of 26,236 and we had cooled off from there some 350 points down towards 25,800. The good part is we are back above that level and we are sustaining above those 26,236 levels as of now on the index. So we are around about 75 points off from the record high levels of 26,325, and the broader markets are no different. The mid-cap index is almost at the highest point of the day and is nearing its own record highs as well. And there are lots of buzzers, particularly from the auto space, not necessarily the large auto names, but take a look at Igarashi Motors is up 12%, JBM Auto is up 6%, Electra, Greentech, Ramkrishna Forgings, be it auto names or auto ancillaries, all of them are doing well in today's session, and all of them are also doing well on very strong volumes. And Igarashi Motors has had 20 lakh shares traded. The 20-day average is only 10,000 shares. JBM Auto is gaining on strong volumes, as is Electra, Greentech, and Ramkrishna Forgings too is 3x its 20-day average. The other sector that has been an underperformer all through last year but has started off the year on a positive note are these power financiers, REC and PFC, both of them trading with gains of around 3.5% each. It is a third straight day of gains for both of these names, and they are up around 6-7% already for this week and on strong volumes as well. REC has had more than 1 crore shares being traded, which is 5x its 20-day average. PFC too is trading 5x its 20-day average with 90 lakh shares already being traded compared to the 20-day average of around 18 lakh shares. And lastly, a name that I wanted to put the spotlight on was Silver Touch Technologies. We spoke about this earlier in the week after this company had won a mandate from one of the armed forces. This is the fifth straight day of gains for the stock. It's a 12% up move in today's session, has gained in all 5 days this week, is up almost 40% so far as we speak for the week so far, and it's the fourth straight weekly advance as well for the stock. And today's session we have had more than 3 lakh shares that have been traded on the stock, the 20-day average being 55,000 shares. And it's not just this year. 2025 was the fifth straight year that the stock had delivered positive returns, market cap closing in on the 1,500 crore mark now.
All right, Hormaz, take that point. A bunch of stocks which are buzzing today. For me, the biggest, sign of the market stability right now are two heavyweight stocks doing well. Yesterday, we spoke with Sudarshan Sukhani. The two stocks that he mentioned would be his stock picks for 2026 were HDFC Bank and Reliance. HDFC Bank currently holding with a gain of almost 0.7%, which is higher than what the frontline index is suggesting as well. And alongside that, we have Reliance. That stock is virtually near record high as well, or a fresh 52-week high at least. So both these counters with their weight, if they continue to do well, we will see the market, the Nifty, hold at the levels that it's currently holding at, 26,250 thereabouts, just about 75 points away from a fresh record high. And the Nifty Bank continues to meander around that important, psychologically important 60,000 mark as well. The broader markets very close to their highs here as well, but a couple of stocks which deserve mention. Bosch, a big move is what we're seeing out there, 7% higher and backed by serious volumes on that counter. The other one is SJV, and that that stock too, up around 5.5%. So these stocks are the ones which are seeing a big gain. And before we move on, Trent, pull that one up as well. It's been a big underperformer of 2025, but starting the last few days of 2025 and the first day of 2026 on the front foot, the Trent stock from its 52-week low has seen a decent amount of recovery as well. Still well off, nearly 39% off its all-time high, which was hit back in October 2024. But a lot of the auto stocks which did well in 2025 start 2026 on in the fast lane as well. So Darshan, what's good, what's not?
So two stocks, you have been talking about all the stocks which are buzzing in the trend, two more stocks that are moving higher, TVS Motor or Hero MotoCorp, and these stocks are high on the back of strong numbers that these companies have reported for the month of December, while two companies are under pressure, and those are Bajaj Auto and Hyundai. So first, starting with TVS Motor, numbers were much better than our expectations. Total sales have increased by 50%, while we were estimating the growth of around 23 to 26%. And all the segments have seen a growth, except three-wheeler segments. All the segments have reported numbers much higher than expectations. And for Hero MotoCorp also, total sales have increased by 40% against our expectation of 29%. And here also, both domestic as well as exports have seen a healthy growth. Scooter, which is a very low base, and the sales for that have almost doubled. But concern for Hero Moto is there is a huge divergence between wholesales and retail sales. While wholesales, they have shown a growth for domestic, shown a growth of almost 30 to 40%. But if you go by the retail sales on Vahan website, that has seen a decline for the month of December. Coming to Bajaj Auto, total sales have come largely in line with our expectations. For Bajaj Auto, domestic remains a drag. They have seen a growth of just 4%, while on export front, they continue to do well. For the third straight month, total export sales have crossed 2 lakh units. For Hyundai, total sales have increased by 6.6%. We were expecting a growth of 13%. For Hyundai also, domestic remains a drag. Growth has come in just at 0.5%, while export continues to do well, has seen a growth of more than 26%.
Indeed, and that is what is keeping the stock under a bit of pressure. Hyundai bucking the trend in what otherwise is turning out to be a very strong sector within the market today. That is the auto stocks, all of them doing well. Even Hyundai actually has recovered ever so slightly from the lows of the day. The auto index, though, firmly holding on to gains of close to 1%. Of course, the big talking point over yesterday and today has been ITC. Of course, the price damage yesterday, the slew of downgrades coming in today. Well, there are downgrades, yes, but is the commentary suggesting, Mangalam, that the worst is possibly priced in, or is there more to come?
There may be more to come. I'm not sure whether how much more comes on the downside, but there's definitely not immediate relief and a big rip-roaring rally on the upside unless the regulatory environment changes for better. But doesn't seem like it right now. That's what brokerages are believing too. Yesterday we were pointing out that the price hikes that the company would have to take would be an effect of around 18 to 35%, and the risks would be down trading and perhaps the illicit cigarette industry seeing bigger offtake, and the impact on ITC would be a lot more. And that's exactly what brokerages are mirroring right now as well. Nomura, for one, they've downgraded the stock. They've reduced their target price to about 340 rupees, which implies a further downtick from where the stock is even now. Remember, it's corrected about 15% in the last two trading sessions. Cigarette tax hike of 40% plus implies price hike of 25% plus, which means that the volumes could decline 15%, revenue could decline 14%, and EBIT could decline 17% in FY27. Not just that, illicit cigarette can impact future growth as well. EPS cut of 18% for the next couple of years, and they have curtailed their PE, on the cigarette business, the multiple from 25 times to 16 times as well, and that's where they've come up with that target price. Nuvama, they've downgraded the stock from buy to hold as well. They've cut EBITDA estimates, they've cut multiple for the tobacco business from 23 times to 17 times, but they haven't yet gone, to sell or reduce, for the simple reason that they believe that at current levels, the stock allows 4% dividend yield. They have a diversified business, and maybe FY27, there would be a favorable turn in tobacco raw material prices, so that could support margins, even though there would be higher prices and impact on their EBITDA and volumes. JP Morgan too, they've downgraded the stock to neutral. Target has been cut from 475 to 375. They believe that, there is increased risk of consumers down trading to cheaper variants and also induce an increased offtake of illicit cigarettes. So all in all, the news not particularly good for these players, and the brokerages understandably cutting their target price as well. With that, we'll take a short break, come back on the other side, commodity markets with Manisha Gupta.
Welcome back. You're still watching Trading Hour. It's turning out to be a decent session for the markets on the 2nd of January. We've also had a whole host of brokerage firms that have actually released their India outlook forecast for 2026. Hormaz is here with a roundup. Hormaz, what kind of Nifty targets, key things to watch out for, and top stock picks are you picking up from there?
Well, the general consensus that we could make out from these commentaries that have been released by a lot of these brokerage firms is the fact that they are still constructive on Indian equities. Mind you, despite being an underperformer compared to the rest of the world markets last year, it was the 10th straight year of positive returns for the Nifty. And that's no mean feat. And despite these even after this 10-year streak, most of these brokerages continue to remain constructive. Now, Ridham Desai of Morgan Stanley mentioned in his note that this quarter, the upcoming earnings season, is likely to be an action-packed one with earnings expected to beat expectations. Now, the RBI will also maintain its foot on the deregulations, further reforms from the government, and of course, the possibility of a trade deal with the US. Now, sectorally, they are overweight on lenders and discretionary consumption as they believe that they are going to be the biggest beneficiaries of India's outperformance. Now, from Mahesh Nandurkar of Jefferies, he wrote in his note that EPS growth will continue to be the strongest determinant for stock price performance in this calendar year. Now, their model portfolio of 30 stocks, it's offering an EPS growth of 21% for FY27 compared to 16% for the MSCI India Index. Now, he wrote that paying a little bit more for visible growth makes sense, and hence their model portfolio has a slightly higher PE ratio of 23 times but has a lower price to earnings growth ratio, or PEG ratio as they call it, for 1.1 times compared to 1.4 times for the MSCI India Index. Now, they have also highlighted some stock picks for the year, which include the likes of Axis Bank, Bharti Airtel, Cholamandalam, TVS Motors, M&M, Ambuja, Lodha, Godrej Properties, their big bet on real estate, Max Healthcare, JSW Energy, and GMR Airports. So these among the top picks for Jefferies for the year. And lastly, also the Citi's outlook for the new year, where Surendra Goyal says that earnings growth trajectory is potentially improving, and that is being aided by financials, and the decent risk reward should support the Nifty and MSCI India returns by courtesy of relative valuations, the potential trade deal with the US, the global equity markets that are broadening beyond AI enablers, and so on and so forth. Now, in the year gone by, FII outflows had reached $18 billion, while the DII inflows were at $90 billion, and primary fundraising stood at close to $30 billion. Now, among the sectors that they are betting on, telecom, commodities and banks outperformed, IT underperformed significantly, and their December 2026 target on the Nifty, around about a 10% upside from here, 28,500 is what their target stands. And let's also now get you a quick chart check. Mehul Kothari from Anand Rathi Shares and Stockbrokers is now joining in. Mehul, good morning. Thank you for joining in. You're now above that 26,200 barrier as of now, and just around 60 odd points away from record high levels. Do we see them next week, maybe even today? And your specific stock recommendations as well for the morning.
Good morning, Hormaz. First of all, thank you for having me on the show, and a very happy new year to you, your team, and all the viewers. Well, on Monday when I was on the show, we had clearly discussed that 25,950 to 25,850, which was a key gap area, would act as a buying zone. Nifty respected that zone perfectly and now turned from there and has now given a breakout about 26,200. So technically, this breakout confirms a bullish cup and handle formation with a pattern size of roughly 400 points from here on. So as long as we sustain above current levels, we feel that we expect Nifty to gradually move towards 26,500 to 26,600 in the coming sessions. Meanwhile, as we have been constantly highlighting strength in the broader markets, the Nifty 500 index has finally given a head and shoulder breakout. So we expect that index to head towards 24,500, which is currently now near 24,000 odd levels. So for the near term, we feel immediate support for Nifty 50 is placed somewhere near to 26,600. A close below this level would negate the cup and handle pattern. So overall, we maintain bullish stance on the market. Now coming to the individual stocks, trend has shown a clear reversal confirmation on the daily chart. So it is poised for a pullback move. One can look to buy trend somewhere near to 4360 with a stop loss of 4180 and upside target of 4800. Another stock which we are liking Thomas is Uno Minta. The stock has confirmed a fresh breakout today, so one can consider buying it around 1300 with a stop loss of 1260 and upside target of 1380.
All right, Mehul, we'll leave it at that. Thank you so much for joining in today. We'll move on to cues from the FNO space, and Mangalam Balu standing by to tell us those. Mangalam?
Well, the market's moved higher, day 2 of 2026, and it's a big surge that we're seeing on the Nifty, 120 points. The Nifty bank holding above 60,000, and the mid-cap index, that's where the party is, 0.8% higher on that index. And the advanced decline tells you that, we have so many more stocks advancing than the number of stocks which are declining, and more so, the quantum of gains is a lot more than the quantum of losses, even though the number is much higher. So look at some of these stocks, and they're across sectors. So Bosch up 6.5%. Decent moves out there, backed by OI build-up. So that's long positions added on Bosch, SJVN, PG Electroplast as well. After having a terrible 2025, the stock starts 2026 with a 4.5% uptick. And we have buzzing stocks in the form of REC, PFC. Both of them typically move in a direction together. But now that the market's moved higher, and now a lot of these stocks are doing well as well, should one look at it expanding from here on? Perhaps not immediately. Why do I say that? Because one, the option writers were positioned earlier for 26,050 to 26,250 range. So we're at the higher end of that range. Secondly, these are still early days in the year. Volumes will pick up next week. Clear trend for the market will emerge then. And the Nifty put-call ratio is fairly overheated, closer to 1.47 now as we speak versus 1.12 yesterday. So this does indicate that there could be some bit of very near-term overheatedness, with the market being at the higher end of the range. We have, a clear trend emerging next week with volumes coming back and the put-call ratio at around 1.5 as well. If you look at, the put writers, they're fairly active. They've increased their positions from 26,150 yesterday to 26,200 and 26,250 now. To their credit, even the markets moved higher in that regard. The call writers, they're still not giving up hope. They are still active at 26,250 and 26,300. Both these calls are fairly active. 26,250 call has a premium of almost 100 rupees. 26,300 call a premium of 65 rupees, telling you that closer to record high levels, we might face supply. So not prudent to perhaps chase this up move that we've seen already. A lot of shorts added on ITC, that continues. And Bajaj Auto along with Swiggy. Swiggy is the latest entrant in the FNO trade this series, and day 3 of this series, Swiggy is seeing some short positions being built up.
Those short positions have taken the stock back below its IPO price as well. So Mangalam, thank you for that update there from the FNO space. We're at 60 odd points away now from 26,325 is where the index stands. Jai Bharat Maruti is another name that has moved to the highest point of the day, 8.5% higher on the stock. Veranda Learning Solutions continues to move higher. Remember, all of these are beaten down names that are making a bit of a comeback in today's trade. Starting off the year on a slightly positive note, Veranda Learning Solutions, that stock is up around 7%. We spoke about JBM Auto. We spoke about a lot of these other auto ancillary companies as well that are doing fairly okay for them. Just before we take that break, put up Kiri Industries, and ever since the management spoke to us yesterday, the stock has taken a nosedive, is down another 10% in today's session. So it's locked in that 10% circuit now as we speak. So Kiri Industries continuing to see some value erosion. Take a short break, get you more details of the Sapphire-Devyani merger, and also talk markets with Ashi Anand of IME Capital on the other side. Stay tuned.
Welcome back. Ashi Anand from IME Capital joins us now to discuss market fundamentals and his top sectoral picks. Ashi, Welcome back and a very happy new year to you. Since we last spoke about Paytm, now, more news flow, more, in the digital space, more IPOs lined up as well. Let me just start by asking you one, your broader view in terms of the top sectoral themes that stand out for you as we start 2026. And in the quick commerce space, the Zepto IPO, for instance, is something that we'll watch out for this year, which is a pure play delivery, sort of play there as opposed to Eternal and Swiggy. Is that a name you're keen on, something you'd look at adding to your portfolio?
Sure, great. Firstly, wish you a very happy new year also to everyone at the studio and also for all the viewers. Can you just start off with the first question around a kind of market outlook and the sectors we're kind of focusing on? 2025 was a fairly kind of a muted year, or not too much happened in the markets. You actually saw large and mid caps kind of outperform small caps after kind of 2 years where small caps were really, really very strong. I think in terms of core trends that we're focusing on, we kind of expect, at least in the first half, large and mid caps to kind of continue to outperform small caps. The core construct we're really looking at is that you've had 2025 weakness in both kind of nominal GDP growth and corporate earnings. And that's really the core in terms of our focus for when do we see the growth revival coming through in 2026. Now, within that kind of construct, I think there are a couple of sectors that are clearly looking interesting. Digital is clearly a theme that we've liked for very long, and we continue to believe that is a space where growth outperformance will continue, not just over the coming year, but possibly over the coming decade. But apart from core digital, I think consumption is clearly a sector where there are some kind of positive tailwinds emerging after quite a few years of underperformance. This is kind of boosted by GST rate cuts, income tax cuts, a sharp fall in kind of interest rates. All of these are quite supportive for consumption recovery. And you're also likely to see a fifth pay commission kind of recommendations over this year. So kind of consumption is a space we are getting a little more positive on. And within kind of consumption, I think auto is, you are seeing some interesting tailwinds in auto because that's a place where I think the GST cuts have had the biggest impact. The other kind of segment is, I think, banking and lenders. This is a space that looks quite attractive. They have kind of struggled with NIM pressures and asset quality issues over the last year. Kind of as we coming into the new year, I think a lot of these pressures have actually bottomed out, and they should be kind of early beneficiaries of a growth revival. So I think digital consumption, lenders, these are kind of spaces that we're focusing on over the coming year. Coming to the second question with relation to kind of quick commerce and kind of Zepto in particular, this is definitely a very interesting IPO that we would be focusing on quite closely. Quick commerce is arguably the most interesting market opportunity that is kind of opening up. And in terms of the kind of growth potential of the space, I think you're still at fairly nascent stages. You still have multi-years of supernormal growth, which is lying kind of ahead of you. A lot of people are still kind of trying to figure out and define what is possible and within kind of quick commerce, and a lot of new kind of areas which, traditionally you would have assumed quick commerce is more limited to groceries and certain high, kind of very high frequency items. But you are kind of seeing success in a number of other segments, which is opening up the overall market potential. The space is exceedingly attractive, and I think what does make Zepto quite interesting is the fact that Zepto is a pure play on this theme as compared to an Eternal and Swiggy, where you're playing a combination of food delivery and kind of quick commerce. That said, it is important to kind of understand that quick commerce as an overall space, competitive dynamics have still not settled. You are likely to see at least 12 to 18 months of high competitive intensity kind of remaining. Apart from your Zepto, Swiggy, and Zomato, you have the Amazons and Flipkarts and a number of other players looking at entering the space. So we kind of expect losses to kind of remain high over the near term. It's not something that concerns us because we think a tremendous amount of value will be created in the space. And within that kind of Zepto, Swiggy, Eternal, all of these are quite interesting.
Sure. Ashi, since you brought up financials as one of the big beneficiaries of this turnaround or pickup in growth that we are likely to see, Within that space, would you want to point out to, is it the PSBs, is it the private banks, NBFCs, fintechs? Where are you more bullish?
Yeah, sure. So actually, I think firstly, in terms of the longer term, fintechs is clearly the place that we see the largest amount of value migration taking place in, a lot of new interesting opportunities emerging here. So kind of if you're looking at the play for the decade, that would be kind of fintechs. But kind of more nearer term, I think what you are likely to see in the shorter term is NBFCs are actually likely to benefit from the reduction in rates a little faster because a lot of them still have a certain amount of their lending book, which is still fixed price in nature, but the cost of funding would actually fall faster. So NBFCs would be the kind of nearer term beneficiaries. That said, over the kind of, as we go into the next 3-6 months, a lot of very high quality private sector banks kind of have not really been performing over the last year and a half. And these are kind of beneficiaries of a much longer term value migration that you're seeing away from kind of PSU banks towards private sectors, towards the higher quality private sector banks. Now, that is a space where we kind of expect NIM pressure to kind of to have already bottomed out and possibly things should start improving a couple of quarters down the line. What we really like about these companies are you have a very clear longer term growth runway, extremely high quality, very high levels of consistency. And in a market where you're either having to choose between growth and kind of valuations, this is a space where kind of the growth quality valuation mix is actually quite supportive.
Ashi, very quickly, in the auto space, we've seen some strong numbers come in for the month of December from Hero Moto, TVS, etc. Anything there, you see a particular upside on that you're looking to perhaps, or any theme you're watching out for in that space?
Sure. So I think autos is very attractive near term for sure, because you are likely to have quite a strong cyclical uptrend. And this is kind of driven by the kind of GST rate cuts. So you are seeing strong momentum across passenger vehicles, two-wheelers, even kind of farm equipment, and you're starting to see some positivity around the CV cycle as well. So I kind of think that autos as a space could do quite well over the current year. That said, from a longer term perspective, we are a bit concerned about the two-wheeler space because you are seeing a big value migration away from kind of IC towards kind of electric two-wheelers. And longer term competitive dynamics and longer term market shares across multiple players is still not very clear. You have newer players coming in, and Ola and Ather. And this is kind of disrupting a fairly cozy four-player market that we've seen over the last couple of decades. So I think we are a bit more concerned about being able to project longer term in the two-wheeler space, and which is why there is a bit more of a preference towards kind of passenger vehicles. I think within kind of PV, you are kind of Mahindra or Tata Motors are kind of seeming, at least as of right now, to be leading the kind of EV space. So that is a space we are quite kind of comfortable with. We are also kind of watching the whole CV space. As the economy starts to recover, there is a potential for M&HCV upcycle, which has been quite weak over the last few years.
Ashi, thank you so much for sparing time and joining us today with your views on what you're watching out for going into the new year. While the index has now extended its gains, 26,280 is where the Nifty currently stands at, so around 45 points away now from the record high levels of 26,325, not 50 odd points away as we speak, but at the highest point of the day. What's not at the highest point of the day though is Devyani International. The stock opened around 7 to 8% higher. The stock has given up almost all of those gains and now trading with gains of just around about 1.25%. Just pull up Sapphire Foods as well. The stock was down around 6 to 7% in the initial ticks in today's session, just to see whether that has seen a bit of a recovery from the lows of the day. Has Sapphire Foods, but we'll put the spotlight on both of these names on the other side of this short break. We get in the fine print of the deal, and that's our big story of the day.
Welcome back. You're watching Trading Hour. The market's just about 50 points away from some of the highs that we saw in December. The frontline index now up about 135 points, holding up above 26,200. Sensex up 414 points. Bank Nifty over 60,000. There you have it. But one pack that's been under a bit of a pressure has been the FMCG pack. That's one of the indices that is still in the red. But let's focus on one of the big stories that we've been covering for you through the day in what has been a long-awaited announcement and a confirmation of a CNBC-TV18 news break. The boards of Sapphire Foods have agreed to merge with Devyani International. Rachna Dhanrajani, who broke that story for us, joins in with the details of this mega deal. Rachna.
That's right. It was a CNBC-TV18 news break confirmed. Sapphire Foods has approved its merger into Devyani International. This was on December 4 when we had reported that the merger talks were at an advanced stage with the swap ratio emerging as the key sticking point. At that time, our sources had indicated that the ratio could be close to 1:2. That uncertainty has now been resolved because under the approved scheme, shareholders of Sapphire Foods will receive 177 shares of Devyani International for every 100 shares held. That's a swap ratio of 1:1.77. Now, the merger is proposed to take effect from April 1st, 2026, subject to approvals from regulators, shareholders, and the courts, of course. Once completed, Sapphire Foods will cease to exist as a separate listed entity. The transaction brings KFC and Pizza Hut and other brand operations under a single listed company in India, creating a consolidated Yum franchisee platform. Notably, outlets located at airports and railway stations are excluded from this merger structure. As a part of the deal mechanics, Sapphire Foods Mauritius, a promoter entity, will sell around 5.95 crore shares, representing about 18.5% of stake to Arctic International, which is a Devyani Group company. Now, Arctic will have the flexibility to subsequently divest this stake to a financial investor later. The board has also approved a new agreement with Yum India, updating commercial and business terms for KFC and Pizza Hut post this merger. After the completion, Sapphire's promoters will be classified as public shareholders in Devyani International. The regulatory filing lays out a clear synergy roadmap. There's EBITDA level synergy of about 2.5% with 210 to 225 crore rupee annual run rate, full realization over 24 months. These gains are expected to flow from structural consolidation, one listed entity instead of two, a single corporate center with registered offices consolidated in Haryana, unified finance, legal compliance and audit functions, a common technology and digital roadmap. This transaction marks one of the largest consolidations in India's fast food sector. The strategic logic is less about rapid expansion and more about the scale, cost efficiency and operating leverage, bringing parallel Yum franchisee business onto one balance sheet with sharper capital allocation and lower overheads.
Oh yes, the big, much awaited deal and a big one at that. Rachna, thank you for first that news break and of course the confirmation as well. Now Mangalam has hopped over to the wall. He'll tell us more about the rationale, the expected synergies behind this deal and a lot more. Mangalam.
Yes, it is indeed a big breaking story in the quick service restaurant space. After years of speculation, the Devyani Sapphire merger is finally here. Sapphire Foods board, as was pointed out, has approved an amalgamation with Devyani International, bringing together Yum Brands, two listed franchises in India. The swap ratio is 177 Devyani shares for 100 Sapphire Food shares based on current market prices, absolutely at par, which explains the kind of moves that we've seen on the stocks as well. Because this is obviously Devyani positive. The merger also means that Devyani picks up additional 19 KFC outlets in Hyderabad, currently operated by Yum, making it an entirely, sole entity that owns all the Yum franchise brands in the country. This deal, done at current market valuations, leaves no room for arbitrage. Why does this make strategic sense for Devyani? It's about scale first, synergies next. Overlaps go, costs come down and operating leverage kicks in. At these levels, the merger also looks valuation accretive and not dilutive, because let's look at the combined numbers. Post-merger, this becomes a 3,000 crore QSR powerhouse. FY25 pro forma revenue jumps to 7,800 crores from 4,950 crores for Devyani right now, and EBITDA also moves over 750 crores with margins inching closer to the 10% mark. What changes for Devyani shareholders? If you look at Devyani's books, the revenues grow up by 58%, the EBITDA increases by 53%, but the equity base just goes up by 46%. So 58% revenue accretion, 53% EBITDA accretion for just 46% share dilution. That's value accretion. So now, from here on, what is it that investors have to track? first things first, per store economics, revenues and cost. There is divergence there. Can, Sapphire stores do as well as Devyani, and together they do a lot better? Secondly, store format expansion. Where, how fast and which format? So far, the best performing format for the company has been KFC, not so much Pizza Hut. And the third, mix shift. How does dine-in work versus delivery? Currently, those responsibilities have been divided between the companies. Coming under one entity, will that increase? Look at geographies as well. And a quick check on QSR valuations. Jubilant FoodWorks still is at the top of the pops with 23 times trading, FY27 EV to EBITDA. Devyani at 17 times, acquiring Sapphire at 14 times at par is where the value accretion happens. Restaurant brands, the deep value at around 8 times as well. But here as well, we have to watch out for a bunch of triggers for the entire sector. The first one will obviously be a recovery post GST 2.0, a possible transaction. Our colleague Vivek had broken that story. A possible transaction in restaurant brands, potential listings, the IPO pipeline. There is Cure Foods, the likely listing of Subway, there is Wow Momo, etc. And then you have a bunch of these food delivery players also starting their own kitchens. So we'll watch out for all those things. Consolidation is back on the menu. QSR stocks firmly back in play. After this deal, what happens to the entire space is something that we will be tracking very, very closely.
Mangalam, thanks very much for putting that very interesting deal, into perspective. It also creates one of the largest QSR entities in India. This proposed merger, more than 3,000 stores combined. So let's go across to Rachna on what it means for the QSR space and the changes that are likely for the likes of Domino's, McDonald's and others in play. Rachna?
Like Mangalam said, consolidation is back at play. Suppose this merger, India's organized QSR space effectively settles into a two-tier structure. Tier 1 is where there are scale platforms. These players combine brand depth, procurement leverage and operating scale. So you have the likes of Domino's India, which has a delivery-led high-frequency model. Then comes Devyani Sapphire, a multi-brand, multi-format, Yum platform model. Then there's McDonald's India, which has regionally concentrated and steadier margins. Then there's your Tier 2, which will be a subscale operators. This is where they would be. This would mean single brand or limited city chains that have structurally higher per store cost. They also have lower bargaining power with suppliers and aggregators and landlords, as we know it. So this gap between these two tiers is quite telling post the consolidation. But coming back to what we understand from this particular merger, now based on filings, guidance and the numbers, there will be no immediate large-scale store closures, which is important, which means no sharp or instant margin expansion, no aggressive acceleration in store additions. And if current assumptions hold, margins would improve gradually and not dramatically. Store level productivity becomes the defining KPI. Now, scale increasingly becomes a prerequisite and not a differentiator. But the consolidation also aligns with Yum brand's broader strategic rethink of Pizza Hut. In November 2025, Yum announced a strategic review of the Pizza Hut business. CEO Chris Turner said that the Pizza Hut team has been working hard to address business and category challenges. However, Pizza Hut's performance indicates the need to take additional action to help the brand realize its full value, which may be better executed outside of Yum brands. Now read that in the context of Devyani Sapphire merger. This is not just an Indian consolidation then. It is a part of a wider shift moving Pizza Hut towards fewer, stronger, better capitalized franchisee platforms that can absorb volatility, invest through cycles and fix the unit economics over time. So this deal does not change the QSR story overnight, but it is definitely expected to quietly redraw the industry's power map, and that will be by FY27.
Boy, for someone who does not like pizza, all of this has left me hungry for sure on a Friday afternoon. Rachna, Mangalam, thank you for putting all of that into perspective. Devyani International off the highs of the day and Sapphire Foods off the lows of the day. By the way, just before we take that break, the Nifty Bank came within 3 points of a record high. 60114 was the record high for the Nifty Bank. The day's high today, 60111. So around about 20 odd points away from where the record high currently stands now for the Nifty Bank. Take a short break. On the other side, the other mega deal that took place between Coforge and Advent International, both of them who spoke exclusively to CNBC-TV18 earlier in the day. Their first media interaction since announcing that $2.5 billion Encora acquisition. Excerpts from this after the short break.
Talk about the big deal which closed out in 2025. Coforge acquired Encora, a Silicon Valley-based AI native software engineering firm, for about $2.5 billion, $2.35 billion to be precise. This marks the largest overseas acquisition by an Indian mid-tier IT company. The role of private equity players Advent International and Warburg Pincus, who were the primary sellers of Encora, is also in focus. In fact, this morning we had Sudhir Singh, who's the CEO of Coforge, and Shweta Jalan, the managing partner of Advent International, join us in the studio to understand the rationale behind this deal, the growth trajectory, and what happens from here on. Advent's own plans with the stake that they have in Coforge post this deal.
We looked at the value. We looked at where the industry is heading, and we looked at where we want to be. Over the last 8.5 years, Coforge has delivered, has grown 5 times over where it was 8 years back. Our market cap has gone up almost 20 times over where it was 8 years back. When we look at where the next phase of growth is coming from, we need to look at where the industry is going to be. And this asset from a value perspective fits right in. We believe there's a new era of enterprise tech that is coming. We believe that the next generation of enterprises, business enterprises, they will have their business capabilities defined by a combination of human and agents, underpinned by a data core and cloud foundations that are purpose-built for AI. If you're not there, we will not be able to replicate performance on the lines of what we've delivered over the last 8 years. And as I said, we've grown 5 times. Our market cap has gone up almost 20 odd times. This is an asset that we very firmly believe offers the value, offers the synergy that will allow Coforge not just to keep growing over the next 1, 2, or 3 years as robustly as we have, but significantly beyond that time window as well. That's how we see it, Prashant. That's how I present it to you.
Yeah, no, absolutely. You must have looked around, right, Sudhir? Anything with AI native is expensive, especially in the US. I mean, nothing. Are we generally in a pricier environment? I mean, you would have been happy to pay less. I'm not sure Shweta would have been happy to take less.
Exactly.
I would have been happier to pay less, but in this case, we don't believe we overpaid by even a cent.
It's been a fantastic deal for you. I mean, I think you got in at about, what, $1.5 billion, right? Back in 2021.
Slightly shy of that, yeah. But
Slightly shy of
yes,
that.
yeah.
And now, I mean, so you've done very well for your LPs, etc. So talk to us a little bit about, I mean, how do you see this transaction? But more importantly, for shareholders, there is this lock-in, right? The statutory lock-in, but also you agreed to
there's a structure that we've agreed.
I mean, about a year or so. So you're free to sell shares by June of 26.
Part of it, and then part of it, there's more of a lock-in, yeah. We don't want to get into too much details around the transaction,
So could you talk to us a little bit about those commitments? Because I think from a stock market point of view, viewers would be interested, because you own a substantial share now in this. So come June, will we see some shares coming into the market, or, I mean, is that commitment is going to... I mean, till that time we have commitment, but what after that?
Wow. I wouldn't come on national television and tell you exactly when I'm selling any stock. No, but having said that, no. I mean, I think that was, jokes aside. I would say, from our standpoint, first of all, this is not an exit. I think that's the most important thing that you need to remember. Why have we done this transaction? Sudhir very, articulated the whole synergy piece very well, right? We think these are extremely complementary assets, which once you put, very classically 1 + 1, we think it should be maybe a 3, 4, or 5, right? So why would we otherwise not have taken cash and done the deal? We've taken stock as opposed to cash because we feel there's a genuine long-term value creation plan here. And that's what we expect Sudhir, who's done a fantastic job with Coforge, to deliver for us, or from a combined entity basis as well. So I would say for us, this is really thinking about the value creation from here on, as opposed to think when I can just jump out of the boat and sell.
So where will this promised 200 basis point expansion in margins come from?
Straight out from the G&A itself. I mean, if you look at the SG&A of Encora, again, this was a conversation that happened on the investor call. That's 16%. Only 6% of that broadly is from sales. There's 10% on G&A.
Okay.
Given our track record, we think we can substantially cut that 10%. On the investor call, we offered 2% from a near-term perspective. That I believe very strongly, and we've said this in the investor call, we will deliver. Signity, if you remember, we went from 11 to 16% in one quarter, EBITDA. Out here, we've said 2% over the first year itself.
The synergies aside, what the street was also worried about was the impact that it would have on your return ratios, because you spoke about the big acquisitions that you've done over the last 4 or 5 years. I'm looking at some data. You know, your return on capital employed on the business at large, which was over 30% a few years ago, is now down to about 20%. As these assets scale, you know, one would expect your ROC to go back, if not to historical levels, improve further. Can you provide us with a bit of a trend or an outlook here?
Absolutely. Coforge is a growth firm. Let's start from those basics. Coforge is a firm that's returned almost 20 times when it comes to valuation improvement over the last 8 years. We look at ROCE. We remain committed long-term to making sure that the ROCE keeps climbing up from where we are today. But we look equally importantly at the total shareholder return. This is a growth firm. TSR is as important, if not more important, at the current stage of our growth journey. When you look back at our growth journey, again, and I say this, I suspect for the third time, a firm where the valuation has gone up almost 20 times over 8 years is an extraordinary story. TSR remains a primary area of focus for us. ROE is also an extremely important area of focus for us. It will come back to where it was over a period of time.
So you've got seats on the board. Will you be a passive investor, active investor?
Aggressive investor.
Sudhir, do you want Shweta to be an active investor? A passive one? Question, but I mean on a lighter note, Shweta. What do you plan to do?
I mean, you know, we are not a mutual fund, right? So, I mean, the idea is not to be a completely passive investor, but, you know, our underlying philosophy is to back strong management teams.
Yeah.
When you back someone like Sudhir, you know, who's almost like an entrepreneur CEO, I honestly don't think that, you know, we need to be, either hovering or interfering the business on a day-to-day basis. Yeah. But hopefully, if we have a role to play and a positive impact that we can make on the business, we'll certainly, both as, you know, an individual, but more as an institution, support the organization, till such time we are shareholders.
Well, that's the mega IT deal we closed 2025 with. But as we head into 2026, after what was a tepid 2025 for Indian equities, what does the outlook look like for the new year? CNBC-TV18 polls the most influential market participants to get their views on the market and the economy. Top market experts will also weigh in on the trajectory for the Nifty, while economists will have their say on whether India's world-leading growth can continue into the next year. On that note, we'll wrap up this edition of Trading Hour. And as we wrap up, Bank Nifty briefly touching all-time highs and remaining above 60,000 mark as we close this. Halftime report will take all the action forward.